Hi traders, welcome back to our channel. I'm here to talk about the recap of the trade I took on Friday. Friday, I took one trade, and that is the trade I'm going to talk about because that trade is very important, because there is a lesson on that trade I want to show you. So Friday, I tuned in a little bit late after the market opened, and as you can see here, I'm going to, let me take my picture a little bit lower and reduce it a little bit more, and let's see. Let me now widen my trade or my screen so that you can have a full vision of my screen. This is where the market are tuning as the market already opened here. The market opened at this point because this is the 5-minute chart, and this is the SMPY, and I had Tesla here and Nvidia at this point. So Nvidia already opened, as you can see here. Tesla opened and came down. Nvidia as well came down here, and I tuned in, and I was about to take a trade, and I didn't see the trade I have to take. So let me start playing the video here and see. When I came, the market was now start consolidating at this point on the support because Nvidia rejected at this point. And when Nvidia start coming up, and this was the VWAP at this point, I start showing interest on the stock for the long because the market also was going higher. So I was expecting Nvidia, after placing this full green candle, I was expecting Nvidia now to place a second green candle to make the new high after the VWAP so that I can enter. And that is why I was interested at this point. And this was my entry point, which I'm going to show you on my chart. Let's see. I took the trade here. You're going to see how I'm going to take the trade at this point. I'm about to take the trade. I'm about to enter here for the long, traders. Let's see. All right, I'm in, traders. You can see here how my P&L start changing. So I went in here for the long side, taking Nvidia for the long. But Nvidia didn't, continue right away as I was expecting. Nvidia pulled back. It pulled back. So if I can pause this video, traders, I went in here. Nvidia is a big cap. What I want to draw your attention here is this point. Where to place your stop. Usually when you get into a stock like Nvidia, $400 plus the price of the share, normally according to the statistic, according to the book, they say that you got to give at least $1. But that depends. It depends of many things. Sometimes you can give a stock $1 the worth, but there are some stocks which move a lot, lower flow, or they have a lot of volume on it, and they move a lot. Small movement like this, it takes $1 or $2 or $3. But when you check the Nvidia here, normally the stop of Nvidia, according to the book, is here below this candle, because I got in on top of this top or this candle. But Nvidia pulled back. Normally this is where I was supposed to place my stop. But when you see or you analyze Nvidia history, you're going to understand that Nvidia move a lot. Placing your stop here at $1 is very insignificant for Nvidia. But where should you place your stop? Are you going to place your stop according to the dollar amount, or are you going to place your stop according to the strategic place? What is the strategic place? Let's say it wasn't NVIDIA, it was another regular stop. But where will you place your stop? Here, ladies and gentlemen, normally your stop could be placed below this support. That is the strategic point, the normal point where the stop have to go. But when you try to analyze or to calculate from here to the lower point, you will give more than $3 for this stop. But are you going to take a $450 stop to give him $3 for the stop? Many people are going to tell you no, they can't do that. But let me tell you something. I'm telling you, yes, it's possible. Why? Why is it possible? It's possible for NVIDIA, maybe Tesla. Why? Because those stocks move a lot. A small movement like this, Tesla going to take you $1. And a small movement like NVIDIA going to take you more than $2. But if you keep placing your stop close, tight, because for NVIDIA, $1 is tight, it will kick you out, and then it will reverse and take your side, and you're already out. That is what happened to NVIDIA here. Let's keep playing the video here. You can see that how NVIDIA came back. If I place my stop below this candle, I could have been out in second, and that is what happened. Let me forward the video a little bit and let's see. You see, NVIDIA now already come down. Look at how NVIDIA plays a candle at this point. NVIDIA plays a candle, a long candle. Here, the spike. Let me forward it again. You will see NVIDIA keep coming down. NVIDIA keep coming down. And now I place my stop at this point. You see, I came here, I placed my stop below the green, or you see, below the stop. And I was right. It was almost $3 something. But look how the candle came close to me to kick me out. You see, NVIDIA came down close to my target. I mean, to my stops. Because the stop was, in the good position, the strategy point. That is why NVIDIA keep coming close and pull back. Coming close and pull back. That was the first time, the second time, the third time, the fourth time. NVIDIA keep doing that. So, this is one example in multiple one. I'm not saying that all the trade you're going to take going to behave the same way. No, each trade is unique. But I'm telling you in a general way. When you're taking a trade, what we have to take from here is that we need to place our stop not according to the dollar amount, but according to the strategy point. Let me show you now what happened next. Let me keep going. You see that NVIDIA came here and it came close to my stop, and I'm still on the stop. And the reason why I removed my stock completely was that I was caring for the spark. The spark is what? When the stock comes directly down and I reject. That is why my stop was that I was still on the trade. Let's see here what happened next to this trade. I didn't get out of the trade. Let's see the same chart after completion. Let's see what happened on the chart. This is where I got in. As you can see, this arrow. I got in here on this arrow, and I placed my stop here where you see this white line is where I placed my stop. My stop was placed below this consolidation. As you can see, NVIDIA keep coming and it didn't touch my stop. Keep coming down, keep coming down, keep coming down, because this was my stop, $440.52. This is where I placed my stop, and NVIDIA never reached that point. NVIDIA keep coming close and reject, close and reject, and this was my entry point. And finally, after a lot of rejection, finally NVIDIA came and break this higher. It went higher, and this is where I got off, because I took $3 on this trade. When I talk about $3, it doesn't mean that I got $3, but I've seen $3 multiply of the number of share I had. So this was a very, very, very nice trade. As a conclusion, traders, when should you place your stop? The answer is that the stock shouldn't be placed only on the dollar amount. It's true. You have to figure out how much you're going to lose on the stock, on the trade. This means what? It means that you have to calculate the number of shares. Let's say you got in here. If you got in on this trade at this point, let's say if you figure out, that is why it's important to enter with the limit order, because limit order will help you to analyze everything before your point trigger. So let's say you said, I'm going to get in on this trade from this point or at this point. You can see how much money I'm going to lose or I'm going to risk for this trade. When you calculate the amount of money you're going to lose on that trade, and you understand that the amount you cannot, risk that kind of amount. Let's say you have a small account, $2,000. $2,000, you want to enter here with, let's say, 10 shares. And that 10 shares, you understand that if you enter here with 10 shares and you risk, let's say, $3, that's going to be $30 loss. And you say, okay, I can give $30 for this trade. That is fine. But another person will try to enter here with 100 shares. Are you going to be able to risk $300 with the 100 shares with a small account? The answer will be no. In that case, you got to reduce your shares. You reduce your share, you take small share, 10 shares or 15 shares, knowing that by taking 10 shares, you just risking $30 by giving you $300 because you want to place your stop where you have to be, in a good area. Not taking 100 share and placing your stop here because you want to give $1. And then when the stock just pulled back like it did, it kick you out, traders. So this is a very, very important lesson for us to take from this trade. Understanding that the stop is a very important thing traders have to master, where to place your stop on each individual trade. So that was a recap of the only trade I took on Friday, and it was a very nice trade because I went out of the trade at this point, making $3 up, plus the number of shares I took, and that was very, very, very reward, of the trade. So thank you for watching, traders, and hopefully we'll have another recap like this one. Bye.